Assalamu alaikum. This video is on the topic of IFRS 9, and the main topic of IFRS 9 that I will discuss is financial asset. So financial asset that I will refer it directly through a standard. This on your screen is a question that was asked by ICAP, Institute of Chartered Accountant of Pakistan, and it has the question of IFRS 9, and some of the financial assets classification have been asked in this question. So I will refer it directly to the standard, so the persons who are not of the Institute of Chartered Accountant of Pakistan students or belong to any other students have a chance that they can learn IFRS 9 directly directly referring it through the standard by the help of this question. So with the requirement, I will start with the requirement. Requirement is prepare the corrected summary in the light of IFRSs. And examiner said in the question, Bilal has recently joined your organization. He has prepared a summary of classification and measurement requirements of financial asset, which will help him in handling the transaction related to financial assets. He is requested to review the following summary. So these are three classification, and these are the categories. So we'll work on it, and we will directly link it to the and refer it to the standard, so it will help you to learn and read the standard as well. So starting with the amortized cost and the business model that the amortized cost uses. The model is used by amortized cost is hold to collect, and the cash flows that is used in the amortized cost is solely payment of principal and interest. First we will prove these two, business model and cash flow, directly through the standard. So in the heading of classification of financial asset 4.1.2, a financial asset shall be measured at amortized cost if both of the following conditions are met. The financial asset is held with a business model whose objective is to collect contractual cash flows. This is collect, and the model is collect. So here it is the reference and the proof. And the contractual terms of the financial asset give rise on specified dates to cash flows that are solely payment of principal and interest. Another point is directly refer to the standard, and it is clearly evident that it is correct, and I have written it correct. So moving on to fair value through OCI's business model and cash flows. Fair value through OCI business model is hold to collect and sell, and its cash flows are same as of amortized cost. So just below the amortized cost, a financial asset shall be measured at fair value through other comprehensive if both is mandatory. In above case also, in this case also, the financial asset is held within a business model whose objective is achieved by collecting and selling financial asset. Okay, this is done, collect and sell. Now it's turn of cash flows. The contractual terms of the financial asset give rise on a specified dates to cash flows that are solely payment of principal and interest. So moving on to fair value through P&L. Fair value through P&L is business model is to hold to sell, and the cash flows condition is none. It means that a financial asset which has the cash flow of solely payment of principal and interest and is hold to sell can be classified in fair value through P&L. So how here is the proof of that. Here it is written in 4.1.4, a financial asset shall be measured at fair value through profit or loss unless it is measured at amortized cost in accordance with paragraph 4.1.2 as discussed above, or at fair value through other comprehensive in accordance with paragraph 4.1.2a. That means that if a financial asset is not meeting the conditions of amortized cost or fair value through other comprehensive income, it has the last chance to move itself in the fair value through profit or loss classification. So both of them are proved. Then we move to the categories. First I will write that which categories are involved in all three classification, then I will prove it. Only debt securities, debt securities, debt and equity. Securities, and the same is in the case of fair value through P&L. So only debt and securities. How it will be proved only debt and securities? Just because there is a cash flow that give rise to interest and principal. Equity give rise to dividend income also, so it will not be included in this classification. Equity securities will not be included in amortized cost due to the cash flows being interest. Okay, then fair value through OCI, debt securities are included with due to the same reason as I have discussed of amortized cost, that its cash flow is included interest. And equity securities are involved in this classification due to standard has given a relaxation and have provided an exception that an entity can record, but if it records it will record it at initial recognition, and it will be an irrevocable election. Here it is written, an entity may make an irrevocable at initial recognition for particular investment in equity instrument. Here it is written, that would be measured at fair value through profit or loss to present subsequent changes in fair value in other comprehensive income. Here it is written, present subsequent changes in fair value in other comprehensive income. So this is the reason that equity securities are included. And here is no condition of cash flows, so here we can include debt securities as well, whose business model is to hold to sell. If the business model of the debt securities hold to collect, it will be included in only debt security, it will be included in amortized cost. If its business model is hold to sell, it will be recorded in fair value through P&L. And equity securities, as any business model that it is want to sell or want to receive dividend, it will be also recorded in fair value through P&L or maybe OCI by taking an advantage of an exception. So moving on to initial measurement, same I will do with the initial measurement, that I will write first fair value plus transaction cost, and here will be only fair value. So I will prove it in with you. Here it is initial measurement, and it is written, at initial recognition entity shall measure a financial asset or financial liability at its fair value plus or minus transaction cost. Okay, the exception to the rule of that fair value through profit or loss will expense out this transaction cost is written in this sentence, that is, in this case, in the case of financial asset or financial asset not at fair value through profit or loss, if the financial asset is carrying at fair value through profit or loss, we are not allowed to include any of the transaction cost in the fair value. We will directly expense it out. So we will move to the fair value subsequent measurement. Subsequent measurement is amortized cost, fair value through OCI and fair value through P&L. So the reference is the paragraph 5.2.1. After initial recognition, an entity shall measure a financial asset in accordance with paragraph 4.1.1 to 4.1.5 that we have discussed earlier in the video. At amortized cost, fair value through other comprehensive income, and fair value through profit or loss. It means that if I have chosen a classification of amortized cost by seeing the business model and cash flows, so I will subsequently measure debt securities as debt financial asset at amortized cost. Or if I have chosen fair value through other comprehensive income due to my business model and cash flows, or by using my exception, so I will use fair value through other comprehensive income at initial recognition, and subsequently I will use fair value through other comprehensive income. And same is the case with fair value through profit or loss. If I have elected fair value through profit or loss, I will complete it and subsequently measure it at fair value through profit and loss. Here I have not explained any reclassification, so excluding reclassification, we will measure the financial asset as per their initial classification. Hope you like the video and have cleared the concept and have a good advantage of referring this question by the standard, and it will help you a lot in reading the standard out. Share it with your friends, and make sure to subscribe the channel and press the bell icon so you can never miss any video from the channel.